Hey, what's up guys, it's Jonathan here, back with another public stock portfolio update, and Happy New Year. So as usual, we're going to do a quick recap of how the market did last week, the last week of 2021. Then we're also going to do a recap of some of the moves we made in the public account. Then we'll do a quick recap of how the entire portfolio did for the week. Then we'll do a short update on how the AMC challenge is going. And we'll talk about a couple things to watch out for this week. So if this video provides you any value, please consider hitting the like and subscribe button. I just checked my analytics recently and it shows that about 85% of you guys are not subscribed. So what are you doing? Hit the subscribe button. It's 100% free and you can always change your mind at any time. So with all of that said, let's get right into it. So to recap the market this week, on Monday we started off the week pretty strong with a sharp rise in the S&P 500. And that lasted throughout the entire day on Monday. Then on Tuesday, the market did correct somewhat in the morning time, but recovered most of its initial losses in the afternoon hours. On Wednesday, just like Tuesday, it did fall in the early hours of trading, but we had a strong recovery in the afternoon and we had a net gain for the day. Then on Thursday, the market was flat for most of the day, but it started to fall in the last couple hours of trading for the day. Then on Friday, we had a lot of volatility in the morning, but this volatility flattened out in the afternoon. And overall for the week, we're up about 0.5%. So to recap some of the moves we made in the public account, this week was a pretty chill week. It was just a lot of dip buying this week. And as always, if you guys want to see me make these trades live, check me out on public. If you use the link in the description below, you can get free stock up to $70. So if you're interested, check it out. So on Tuesday, we made quite a few trades. We bought about $2 worth of Tesla stock at $1,088.05 a share. This was basically just your basic grow position, buying the dip purchase that we made. Recently, Tesla has started to rebound after news came out that Elon is done selling per his 10b5-1 plan. And on Tuesday, we also bought Enphase. We bought about $2 worth of Enphase at $187.29 a share. And in my opinion, I think that that's a really fair price to pay for Enphase. I don't think you're getting ripped off, but I also don't think you're getting the deal of a century either. It's not a bad price to add on to that position. Also, we bought some Etsy as well. We bought about $3 worth of Etsy at $221.73 a share. And at that price, it's a little bit rich on its valuation, but I think that this is such a solid company. I actually don't mind paying that price for it. So thought we should build a little bit more of a position on it. Also, another thing with Etsy is that it's really hard to see Etsy get beat up, even when the entire market is beat up. It's a really interesting stock because there's a lot of people bullish on it, even Elon Musk is as well. On Tuesday, we also bought some Google, or Alphabet. We bought about $2 worth of it at $2,933.55 a share. And recently I have been adding more to this position as I see this as being one of the best advertising plays. And if you check out my video talking about four things to watch out for in the stock market this year, one of the things I did say is that companies that sell advertisements I think are going to do very well this year. So if you want to know my full explanation, I'll refer you to check out that video. And on Tuesday, we also bought some more Matterport. We bought about $1 worth of Matterport at $22.35 a share. And in the low 20s, I really like Matterport. It did run pretty hard on a lot of the metaverse stuff, but when the market started to sell off, Matterport almost halved. For me, I believe in Matterport long term. Being exposed to the real estate industry, I see how effective Matterport's technology is at making contractors, insurance adjusters, real estate agents' lives very easy. I really do like Matterport as a long-term play. Let's hop into iPad and let's see how the rest of the portfolio has performed. So right now, the portfolio currently sits at $157.14. And so far, we have deposited $150 into this account. If you recall from the early episodes, we did get a free $20 worth of Tesla when we signed up with Public. So far our cost base is at $270. Recently, the market has taken a beating, so the whole portfolio is down. And at the time of this recording, we're down a little bit over 7.5%. Our biggest hold inside this portfolio is Enphase, and currently our Enphase position makes up a little under 20% of the portfolio. It's currently still up, even with this beat down in the market. The position is still up 8%, so it's still doing pretty good. I really like what this company is doing long term. The next position we have here is Tesla. Currently, our Tesla position is up a whopping 24%. and makes up 19% of the portfolio. Even if the market continues the way it's been, I think Tesla could perform well over the next week or two, given that Elon has finally finished his selling and that cloud has kind of been lifted over the stock. So the next position we have here is Robinhood. Our Robinhood position has been beat to crapper. It's currently down 40%, and in my opinion, I think that this stock is a little oversold at this point and doesn't necessarily deserve the kind of beatdown it's been getting. And this position currently makes up about 14% of the portfolio. The next position we have here is Alphabet or Google. Okay, let me ask this. Do you guys call it Google or do you call it Alphabet? Let me know in the comment section down below because I'm curious to know, because I don't think I've ever met anyone who calls it Alphabet. Almost everyone I know calls it Google. But anyways, we're currently up a little over 1% on this position. It makes up 12.19% of the portfolio. Next position we have here is Etsy. Our Etsy position is pretty small. You know, it's really hard to get a really good deal on Etsy, but it is something that I am committed to building out more because even in my personal accounts, it doesn't make up that big of a position. And I think that they are a very solid company. Even though we are down 2% on the position, I still think that this company is very solid in the long term. Currently makes up a little over 6% of the portfolio. The next position we have here is Disney. And Disney recently has been pretty flat. It's kind of been stuck in that 150 channel there. We're currently down on it about 2.5% right now. Makes up a little under 5% of the portfolio. It's definitely something I'm willing to add to if we see it fall a little bit more. I'm surprised with all the Omicron talk that this stock hasn't really taken a hit. Disney has been such a weird stock in 2021 because it's kind of transitioned away from being a recovery stock. So like think travel, cruise lines, and it's become more of a tech stock and it started to behave more of a tech stock. So it's a really weird transition for Disney. I think that's why we're seeing it stuck in this 150 channel. Next position we have here is Matterport. Our Matterport position currently makes up a little under 4% of the portfolio, and we're actually down about 5% on this position. And if we start seeing Matterport start to hang out in the 18-19 range, I'm definitely considering adding more to Matterport. So the next position we have here is Cloudflare, and currently we're down about 3% on our position on Cloudflare. Cloudflare and a lot of other software-based companies, especially ones that are not profitable, took a pretty big hit during earnings season this year, and their valuations got slashed pretty hard. So I just saw that as a really good opportunity to start adding to some of these software companies. So far, Cloudflare has kind of just been sitting in this like channel and hasn't really moved too much. So in my opinion, I think that this isn't a bad time to buy it. But you just have to understand with software companies, you are paying super high valuations. And that's mostly because in the future, there's a strong belief that these companies will become highly profitable since they are selling software, which is a service that's very scalable and doesn't take a whole lot of labor to be able to scale out their products to different customers. So next position we have here is Amazon. We're down about 3.5% on it. It makes up about 3% of the portfolio. This has been a really mellow year for Amazon. I think for the year, Amazon is up like 4.5% or something like that. So it's not bad. I mean, 4.5% is really not that bad of a return, but compared to like the 28% the S&P got this year, it ain't going to cut it long term. So the next position we have here is Nvidia, and our Nvidia position is currently down about 5.5%. With Nvidia, like I said in my Nvidia video, I feel like their valuation is a little too rich right now. I have to admit, I am still buying Nvidia because they're just such a great company that I do want to be a part of it. But I also do understand that the valuation for this company can nosedive at any minute. So the next position we have here is Trade Desk. And our Trade Desk position is actually up 2%. And currently Trade Desk makes up about 2.5% of the portfolio. Trade Desk, again, is another advertising play. I do think that they do have the opportunity to be good this year. I want to do a little bit more in-depth research on it, so watch out for a video about that. So the next position we have here is Palantir. Palantir has been getting beat up pretty badly recently. Currently we're down almost 20% on the position. It makes up about 2.5% of the portfolio. Palantir, kind of like Cloudflare, they're another software heavy company where the valuation is pretty rich. So it has gotten beat up a little bit, but I think that it could do well long term. So the next position we have here is Redfin. And our Redfin position is down 22% and makes up about 2% of the portfolio. Recently, Redfin, kind of like a lot of the other real estate related stocks, have been getting beat up and that's mostly due to concerns over rising interest rates. We're starting to see the demand for refinances starting to taper. So the real estate industry as a whole is starting to go through some headwinds. But I think long term, a company like Redfin will do well. It will just take a really long time before the stock starts doing well. So the next position we have here is Ethereum. Our Ethereum position is down about 2.5%. Cryptocurrencies have kind of been doing this weird bounce recently. It'll go up, then it'll come down. They'll be mellow for a little bit, they'll go up, go down. But our position in Ethereum makes up about 2% of the portfolio. Our next position is Ethereum's big brother, Bitcoin. And our Bitcoin position makes up about 2% of the portfolio. The next position we have here is Docusign. And our Docusign position currently is down 2%. And makes up about 2/3 of 1% of the portfolio. It kind of falls along the lines with what I said about Cloudflare and Palantir. It's another software company that doesn't make money, so it's suffering somewhat of the same fate that those two companies are. So I believe back in September, we bought 4 shares of AMC at $37 a share. Currently, those shares are at $27.38. So we're down about 26%, or about almost $40 in total. And like I promised, I do plan on holding them until the end of 2021. But by the time you guys are watching this video, it's probably going to already be 2022. So I may sell it this week. I may not sell it this week. But if I do sell, I will let you guys know. The important things to watch out for this week, there's not really any major catalyst for this next week that I could see. I think really the thing to watch out for is the market itself. Recently, the market, especially the small caps, have been doing this thing called a dead cat bounce. It's a common saying in the stock market. And basically the idea behind it is that even a dead cat will bounce if it falls from a high enough position. Basically what that is that when we see a rapid drop in the stock and then we start to see it mellow out and we see the movement of the stock start to come up, what we'll sometimes see is we'll see a day where like a stock will go up 10%, then the next day it'll immediately drop 5%. One thing to remember in the stock market is that when the stock goes down 5%, it has to come up 10% to make up for that 5%. It's not like, oh, if the stock goes down 90%, then it comes up 90%, it's going to be back to where it is. It's going to have to go up twice that to make up for the drop. So that is something good to remember. I know we saw a lot of this last week. That was probably mostly due to the low volumes we saw being traded on the market. Typically the last week of the year, there is a lot of low volumes in stocks. And that's mostly because a lot of people tend to take that week off, even in the finance space as well. Hopefully this week we'll start to see a stronger direction in the market, whether we're going to continue to keep going down or if we're finally going to start rallying. So that's basically all I got for you guys. I don't remember if I said Happy New Year's, but if I didn't, Happy New Year's. Like I said at the beginning of this video, 85% of you guys are not subscribed. Man, what are you guys doing? If you made it all the way to the end of this video, you'll probably like my other videos as well. So subscribe, hit that notification bell so you get notified when I post the next video. Also hit the like button. It never hurts, only helps. What are you guys looking for in the markets this week? Let me know in the comment section down below. I'd love to hear from you guys. Also, check me out on all my social medias. I have started to post more shorts, Instagram Reels, TikToks. So if you're interested in seeing those, check me out on those platforms as well. And I'll see you guys in the next video.